Alrighty, we should be good to go. All right. We're gonna give it another 2 more minutes. Just make sure everything is all good. All right. So first things first. Let's go ahead and check news on FOREX Factory. So like I mentioned yesterday, guys. Yesterday, Tuesday, especially today, there's not going to be too much going on. So as you guys can see, all these folders are yellow, meaning there's not as much volume going on in the market this morning until later. Especially at 4:45 p.m. it starts to pick up on NZD pairs, but at the moment there's not too much going on. There is an announcement on CAD, but I'm not going to be live for that. I might send an analysis while I'm in class, but there's not too much going on today. Tomorrow starts to pick up. Wednesday we have announcements all day, OPEC, JMMC meetings. And then we have news on USD pairs at 8:15, and then we have news at 10 a.m. And again, when you guys don't understand what any of this stuff means, you simply just want to go to the right side of the folder, click on this yellow folder right here, open detail, and then you can get all this information right here. So 10 a.m. tomorrow, and I'll explain more as we trade live or as I send out analysis, but why traders care. It's a leading indicator of economic health. Businesses react quickly to market conditions, and their purchasing managers hold perhaps the most current and relevant insight into the company's view of the economy. Jolt job openings. Sometimes it won't give you all the information. FOMC especially, it's a primary tool of the FOMC, which is a Federal Open Market Committee, uses to communicate with investors about monetary policy. It contains the outcome of their vote of interest rates and other policy measures, along with commentary about the economic conditions that influence their votes. Most importantly, it discusses the economic outlook and offers clues on the outcome of future votes. So it gives you all the information here, guys. But again, there's not too much going on this morning. It might be very chill like yesterday. And then we are going to start this workshop today. We're going to talk about market structure. So we're going to wrap that up through the candlestick Bible that I have up here. We're going to start with, let's see, trading tactics. So talking about uptrends, downtrends, stop loss, where to place your stop loss. Indicators, structure, all that good stuff. I'm gonna make sure I cover everything in this live, and then we're gonna do a recap tomorrow, and then we should finish strong Friday with NFP. So yeah, we'll talk more about confluences as well, how to combine your candlestick patterns with structure. All that good stuff will be there. All right, so let's go ahead and check FX Street real quick just to see if we have any announcements before we look at the chart. So we traded gold. Let's go ahead and read some of this stuff right here. Gold price extend its recent retracement slide from the vicinity of the 1915 level or 9-month high touch last week. 1950 level or 9-month high touch last week and remains under some selling pressure on Tuesday. So selling pressure on Tuesday that we experienced yesterday, and we'll go ahead and recap this in a second. But our analysis did play out perfectly, guys. I called this out yesterday. We had a nice sell stop analysis where basically I wanted price to eventually have a breakout from this zone. And it took some time, guys. We were actually in a phase of consolidation. So we were around this area last morning and price was still consolidating in this range before it had this nice breakout back into our original range from Monday. So we had all these candles from the side. We had all this traffic we wanted to get filled. And then price did exactly what we wanted to do. It had a nice breakout. And look at all of these candles back to back. This is what you call a nice trigger, impulsive move, whatever you want to define it as. But when you have all of this, these bearish candles back to back, it holds a lot of volume. And there's a reason why this happened is because there's a lot of pressure being built up from the bottom and it simply filled the rest of the stuff. So this was a beautiful analysis and it played out just the way I wanted it to. If you guys took this setup, that's awesome. You would have got 60 pips using a nice 1 to 2. Or we used a 1 to 3, I'm sorry. Or we had a 20 pip stop loss. So if you multiply that by 3, that's 60 pips, which gives us that 1 to 3 risk to reward. Beautiful setup. And again, guys, this is why I love using this concept. I'm simply just marking up my zones, waiting for price to have a break of structure back into a range or find new structure and a new one. So we had two bias, right? But I was going more off of the sell entry. You know, price could have pushed up, taken out these highs, finding new structure to the upside, but instead it had a nice breakout to the downside. And we had another confluence, which is something I use as well, which a lot of people don't. But on this website, I'll explain it briefly. You can actually find the perspective of what majority are looking at in the market by simply looking at the sentiment of price. So I looked at commodities. I noticed that gold had a lot of selling pressure, simply took that bias, and gold played off of our technical analysis. So this was a beautiful setup, guys. Beautiful, beautiful, beautiful. These are the type of setups I want you guys to find on your own. So when it comes to my zones, I know a lot of people might be questioning if this is an accurate zone. Notice how price completely melted through our 1 hour demand, which is perfectly fine because when this happens, simply just try to find a new area. So we can actually come down here and place this guy right here. Now, is this as accurate? In my opinion, no, because I have my zone kind of marked in a pretty bad spot because we don't have confirmations, meaning we don't have a touch on the zone. We don't have any wick offs like before. If I can show you guys, the reason why I like this zone so much because we have confirmation right here that this zone was holding at some point. So this is why I had this zone marked up like this before we had a impulsive trigger pushing through this zone. So when this happens, one or two things could show up. One, it could be a fake out, right? It could be a fake out meaning that price is simply just having that push phase before it comes back in. Usually on the higher time frames, that will look like a long wick. In this example, if we come over here, scaling it on the 30-minute time frame or the 15-minute time frame even, coming back down to that area, you can clearly see that wick is made up of several candlesticks. So sometimes when you're on certain time frames, when you have candles grouped up together after pushing through a zone, if you scale up, that could be a wick. So in this example, this could be a fake out. If we go on the 4-hour or even the daily time frame, this candle is still having some formation. So who's not to say that it might push up and form a long wick? We don't know yet. But we do know that our analysis played out because it had this nice breaker structure, came back down into a range, and now we're waiting to find structure again. So I'm actually going to go ahead and delete that now, so it's not confusing. But we are back into our first range, so we can drag this bad boy up here. And we're going to analyze what gold does on Tuesday. But yesterday was a perfect example of using this concept, simply waiting for a breaker structure. Price did exactly what I wanted it to do, guys. We had zero drawdown. TPs were smacked. And this was a trade I sent out on Discord as well. And if you guys are subscribed to Telegram, you should have gotten this analysis for free as well. I sent this out on Telegram for free. And if you guys are still confused, let me hold on, guys. I actually posted a video explaining this whole concept. So I think, yeah, right here, easy trading strategy on gold works on any pair. I explained this a week ago. I might do an update sometime in February with different time frames, but this primarily works on higher time frames. So 1 hour, 2 hour, 4 hour. The video's right here, guys. So now we do have some sort of structure. We have this nice level of support forming a market gap. So price could respect this zone or this area of support sometime this morning, but I primarily like to trade zones where we have confirmations. So it's very hard for me to mark up this zone of demand because, yes, I technically could drag this out like this, guys, and wait for price to do its thing. But I like trading zones with more confirmations. And when I say confirmations, just like the one I had marked up before, I want to have an area or a retracement off that zone that gives me more confirmation that that zone is going to hold for a long period of time. So right here, price is dipping down just a little bit, but it's not quite touching that zone. So right here, this area that I had marked up, price is kind of floating above that area, not giving me confirmation that this is a valid zone. Yes, it is forming a market gap, and yes, we could technically say this is a level of support, but zones are more realistic in the trading realm, I guess, because a lot of people have their orders fluctuating in a zone rather than a precise level of support and resistance. So when you trade your zones of supply and demand, you can still use support and resistance. So another name of HPI, highest point of interest, could be that resistance level in that zone. And another name for LPI could just be support in that level of that zone as well. So let me write this out so it makes sense. HPI, right? Highest point I can't spell this morning. Highest point of interest. And then we have LPI. I think what I'm gonna do sometime in February is make a video on this concept that I use for myself. Those points. Because no one really uses this concept the way I use it that I've seen on YouTube, unless they're going from a larger perspective of a endpoint of a trend. So like highest point of interest, they would usually use the concept at a given high on a higher time frame that price made from a all time. So like that highest point given from a daily perspective, or the lowest point given from a lower perspective. So that low that price hasn't reached in a long time. But I use these concepts with supply and demand. So lowest point of interest, these could be alternatives for support and resistance within your zone. So let's say price is in a given order block. All right, let's just generalize it. Let's say price in a given order block. You could use this concept to figure out if price is going to start to retrace or have a reversal in the market off of the surface level of the zone, or off of the bottom. What do you say? Surface, the concrete level, I guess, of that zone. So I might definitely have to make a video on that. But in this example, I'd probably just have a zone marked up right here and wait for price to hit this lowest point. So this would form a huge market gap. And of course, we could check our RSI as well. That's another indicator that I love to use. I think someone asked me on Instagram, because I made a video explaining the RSI, which is the relative strength index, which helps you determine if price is oversold or overbought. And someone asked me to show an example, a live example. So if we can use that, if we can incorporate the RSI into our analysis sometime this week, I will most definitely make that video for Instagram. This is not the most beautiful range, but we are going to see what happens. Same concept, guys. We're either going to have a breakout into a past range from last week, or it's going to respect range one, respect this gap right here, right? And then push up. But not a lot is going on this morning, so we might not even get a setup like we had the other day. It might just be pretty dry this morning because of news. Plus it's NFP week, but it's going to pick up tomorrow. So if you guys missed out on yesterday, that's perfectly fine. I'm still going to try to find some setups this week. And then in the next 10 minutes, we're going to go ahead and look at some other pairs as we wait for gold to play out. Okay, cool. So look, I'm gonna show you guys this now. I'm not sure if you can see this. Let me let's see. All right. Let's see. All right. I'm not sure if you guys can see this. Just let me know. But I'm on MetaTrader 5 right now, and I'm looking at the chart on the app where I have the RSI set up. If you guys can see my screen, this is what gold looks like. So right here, if you guys can see that, those zones that I have marked up, it lets me know where price is at a given area of being oversold, meaning that price has to buy, or overbought, meaning price has to eventually sell. So if you guys can see on this chart, price is in the territory of being oversold, which means eventually it has to buy up, okay? Because if price goes beneath that zone, it means that there's going to be an impulsive trigger to the upside, okay? So that's why I have this set up. That's why the RSI helps me as a confirmation that price is eventually going to reverse the market. So I'm not sure how I'm going to make a video and post it for Instagram, like a short reel or something explaining this concept, because I know someone wanted to see it live. But basically, you know, let's say you have your technical analysis. Let me switch this real quick. All right, so let's say you have your technical analysis, right? And you notice that price is at a given area of supply, demand, and you have your market gap, you have your confirmation set up, but you're still not confident that price is going to respect that zone, I would say check your RSI, because it's going to tell you if price is oversold in that given area to start pushing up in the market. So again, I'm going to show it one more time, because I know that was pretty fast. So on MetaTrader, guys, if you go to your chart on the app, you can add this indicator. It's called the RSI. And I know indicators lag. I know people don't like using indicators, but this indicator is by far my favorite, because it does show you if price is in a territory of being overbought or oversold. And I stay on the 1 hour time frame because it's the most accurate. So I'm just going to show it again so you guys can see. This blue line right here is letting me know if price is oversold or overbought. It's very, very useful. And I've been using this for about 2 years now, guys. I wouldn't just talk about an indicator like this with full confidence if I knew it didn't work. Like, I know some people use divergence and people use SMAs, moving averages. And I've been experimenting with so many indicators for the last 3 years. And I would say the RSI is something that hasn't failed me. Is it 100% accurate? Of course not. There's no indicator that is 100% accurate, but it is super helpful when adding another confirmation that your trade is going to play out the way you want it to play out, right? So yeah, especially with market gaps, right? When price is oversold, if it's pushing down the market, eventually it has to buy up. I think that's why people use Fibonacci retracements, and they have a hard time figuring out if price is going to eventually push up for that retracement to add in that tool. So like, let's say I was trying to add a fib at this area, but I wasn't quite sure when price was going to close. Then my RSI would kind of help me with that directional bias of finding that retracement, or finding an area that price is eventually going to retrace off of. Let me go ahead and put my chart back on so you guys can see exactly what I'm talking about. So if we were at this area and we wanted to try to figure out the best time to place our fib, you can also use the RSI to say, hey, price is oversold, so eventually it's going to retrace to this 50% zone or this golden area that we have marked up on our fib. So that's just a tip, guys. And if you guys need settings, if you guys need a tutorial on how to get that set up, just let me know. If that doesn't make sense, just let me know, because sometimes I do speak fast. But we're gonna give it another 7 minutes on the next 30-minute interval, and we're gonna check our other pairs. We're gonna check Euro USD this morning, GBP pairs, and check back on gold. I think that's gonna be the main focus for this morning, and then we're gonna end this live with a 30-minute workshop on market structure. So we're gonna give it another 5 minutes. You guys have any questions, let me know, but I'll be right back. I'm gonna make sure everyone's going to Discord. Again, I don't have any moderators at the moment, but if you guys are interested, just let me know, because that would definitely be useful this whole year, as I am going to be consistent, as I am one man on one ship at the moment. But I will be right back. Have any questions, let me know. See you guys in a second. Alrighty, so let's go ahead and analyze our other pairs. It's now 6:30. So Euro USD is still in our consolidation phase in this range. Same concept, guys, that we used on gold. Simply waiting for a breakout, either to the upside, right here, taking out these highs, grabbing all these orders that people have placed, pushing up to our new zone of resistance or a new area of supply. So generally around this area over here that we can mark up for the time being, or we're gonna wait for price to have a breakout to the downside. But in this scenario, it is looking like price is pushing up. So if anything, we are gonna place a buy stop sometime this morning for Euro USD for that push. If we scale in on the 1 hour, you guys can clearly see that price is making a move to the upside. So this is my analysis for Euro USD. Again, it's the same thing we used on gold, guys. The same thing we used to catch this nice sell back into range 1. We're gonna use to catch this nice buy into range 2. So this would be range 2. And then this is range 1. So I'm gonna go ahead and send this in the Discord in a second. Let me make sure people are good to go. Let's see. So let's see, if we scale in on the 1 hour, if we wanted to make this very accurate, I'd actually probably have a zone marked up right here of a most recent zone that I want price to be attracted to, because we have a confirmation that the zone is actually holding from this candle right here. As you guys can see, this bearish candle actually pushed off of this supply. So we could say that if we do get a break of structure, if price does decide to break out of this zone and take out all these highs, it's going to be attracted to this next zone right here. So this being range 1, we're simply waiting to find a breakout or a break of structure. So this is being range 2. We want price to take out these highs and tap our LPI. So we could place a buy stop. The only problem is this would be a very small scalp. And I'm not a huge fan of catching scalps like this unless you're using a large account, which I know for the mass majority of people that are watching this are going to be starting slow. But you could also scale it out to that HPI. So we might as well just scale it out and break even. So it looks something like this, guys. So if we had a buy stop, we would simply wait for a breakout. And let's go ahead and move these over here so it doesn't look too confusing. So this would be a very tight stop loss of 10 pips, which I'm not a huge fan of, because again, guys, when you guys use a small range for your stop loss, if it's like 5 to 10 pips, you have to be careful, because price isn't always going to what's the word? It's not always going to form the way you want it to. There might be some phase of consolidation. It might fake out. There might be some areas of consolidation. Like for example, if we're around here, if we knew price was going to range for a period of time, so at this arrow, if we wanted to place a sell, notice how we have this wick kind of poking out the zone. Like this is already, let's see. Like that wick is already 5 pips. You get what I'm saying? So like if you placed a sell and you were in drawdown for 5 pips and your stop loss was at 10, well, you're already freaking out. You're already second guessing yourself, because that candlestick isn't respecting your zone the way you want it to be respected. Price isn't always going to be perfect. There's going to be some wicks poking in and out of your zones, poking in and out of support and resistance. So when you have a tight stop loss, you're at risk. So 10 pips, I'm kind of iffy up. 10 pips, I'm kind of iffy on. only because I know price is going to fluctuate. But for the example, the reason why it's so tight is because we have a tight zone that we want price to be attracted to after it has a breaker structure. So this would be my buy stop for a quick scalp on Euro USD. We're using a 1 to 2, 10 pip stop loss, which is perfectly fine in this scenario. And then TP would be 20 pips. So let me go ahead and type this out. Oh, this isn't Euro USD. I'm sorry. This is Euro GBP. Sorry, guys. I'm going to go ahead and send this to Discord real quick. If you guys need the coordinates, let me know. But again, the whole objective of my live streams is for you guys to catch your own setups so that you're following along with my analysis. So if you have TradingView set up, you can easily put in your own coordinates. It doesn't have to be the exact coordinates as mine, but as long as you understand the concept, waiting for that breaker structure, you can do as you please, okay? Because if you just copy everything that I do, then you're not going to become an independent trader. And I think the whole objective of trading in this industry is to be independent and have your own peace of mind so that you don't have to follow up on the next person on Instagram or even YouTube. You know, the whole objective is for you guys to have your own scale of independence so that you can trade on your own time, okay? Not on my time, on your time. All right, give me 1 second, guys. I'm gonna go ahead and write this out for the chat on Telegram. But if you guys have any questions on this analysis real quick, on this quick scalp, just let me know and I'll be more than glad to answer them. But good morning to everyone that is on the live right now. Hope you guys are having a good Tuesday and a good start of your week. I appreciate you guys for tuning in. Let me know if you guys are trading any pairs this morning that you want me to analyze, and I'll be more than glad to do so. All right, I think I am good to go. Let me go ahead and make sure that everything is sent out real quick. Give me 1 second, guys. Okay, cool. So let's go ahead and analyze the next pair. We have our analysis for EG. All right, so Euro USD. This is a great example of what I mean when price is still fluctuating within a daily candlestick. So this is a good example of a huge fake out that a lot of traders will experience, especially when they're looking at structure. In this example, it's more choppy. You guys probably can't see it the way I see it as, but this could be an example of a bullish trend where we have some structure of higher highs and higher lows, right? So if you were to place a fib on the daily time frame, wick to wick, and you're trading off of this candlestick alone, well, scaling in, you'll notice that price did fail this golden zone or this 50% zone before initially touching the 78 level, which signifies that a fib retracement or a fib level is invalid. But as you guys can see, the next opening candle is bullish. And what happens over here? We have a huge wick. So this is a choppy example, but oftentimes when people are using fibs, they're relying so heavily on candles and candlesticks, where if something happens like this, they're gonna get faked out in the market. So you have to be patient. And again, this isn't the best example because of course, we do have some previous structure that price did fail to respect over here. And if we scale in, you guys can clearly see what I'm talking about. Let's go ahead and delete all this stuff actually. Let me actually use a blue line because I think this is way too confusing for the average trader. Let me go ahead and use this instead. So you guys can clearly see off of this blue line right here, this range, price is respecting range 1 for some time. It's wicking off right here. So we have a touch right here, right? We have a touch right here, and we have a touch right here. You guys see that? Let me go and delete this so it's more clear. Hopefully you guys can see exactly what I'm talking about, but we have a range, okay? So this is range 1 and this is range 2. It's not the best, it is pretty choppy, but this is considered as a range because it is divided. Or better yet, if we want to make it complex, this would be range 1, this would be range 2, this would be range 3, okay? And if you were to combine the concept of fibs, using that fib retracement, scaling out using top-down analysis, well, starting on the higher time frame, we can clearly see that price is forming some sort of structure, signaling a bullish trend or a bullish continuation. So you could place your fib. Let me go ahead and come over here. You could place your fib from the bottom of this candle to the top like this, and then scaling in, we can see that price failed structure because it came back into this range. So this is why you guys want to be careful, because yes, it did tap our golden zone, but look at this bearish candle right here. This would have scared a lot of traders, because not only does it not respect that newly formed support around this area, but it also melts through our golden zone, our 50% level, which makes this a very choppy setup. What number should I use for fib retracement? I'm not sure exactly what you mean. By the way, welcome to the stream, Kelvin, and just give me a more detailed question, because I'm not sure what you mean, and I'll be more than glad to answer that. But in this example, guys, it'll be a choppy example of a fib setup because you're solely reliant on candles rather than structure. And for the last 30 minutes, I'm gonna go ahead and cover more of that in a second. Talk more about market structure and how to find solid setups using market structure with other systems such as ranges. Okay. Because there can be choppy setups just like this, where you're not too sure if price is going to respect a fib retracement. So we're gonna talk about that at the end of the stream. Structure, how to find structure, how to use confluences with structure, all that stuff. It's going to be a general recap on market structure. So you guys will come into the markets with a full understanding of market structure and price action. So that's my analysis on Euro USD. It's going to be pretty choppy, but we're just going to see what happens, guys. And of course, we have news on FX Street that says Euro stays below 1.085 after EU GDP. So Euro continues to trade in negative territory below 1.085 in the European session on Tuesday. The data from the Eurozone show that GDP grew at an annual rate of 1.9% in quarter four, compared to market expectation of 1.8%, but failed to boost Euro. And then if you guys don't understand any of this stuff, just come below here. It's going to give you a recap of everything that I just talked about. So Euro forecast, sellers take action as Euro drops below key support area. So sellers take action. This is a more easier analysis off of the announcement. So it's pretty much telling you that Euro is selling, okay? So Euro USD is selling this morning, guys. And then you can go ahead and confirm that on the chart. We can clearly see that there is a bearish candle at the moment that is fluctuating on the daily time frame. There's not too much support going on as well. So we're going to see what happens on Euro USD this morning, but it is dropping. So like I said, guys, this probably is not going to be a valid Fibonacci setup just because there's a lot of confirmations signaling a continuation to the downside. Plus we have news. So if anything, price is more than likely just going to respect the flow of this range, pushing down to the bottom of range 2, back down to our formed support at around 1.07, respecting a gap in the market. So if anything, we might see something like this. All right. So it's probably going to have some fluctuation in range 2 before we have a move to the upside for some time. And we'll keep this up throughout the week in case we decide to come back tomorrow, especially since the news is going to pick up at around 5 a.m. on Euro. So we have CPI, we have OPEC meetings all day. So it's going to pick up tomorrow, but we're going to keep this up throughout the week. What the Fibonacci retracement best levels? The Fibonacci best levels. Okay. So let me just draw this out. Let me know if this answers your question. So there's the 0.76, the 0.61, 0.5, which is the golden zone, aka the area of retracement. We have the 0.382, which is past structure, right? We have the 0.03, which is TP1. We have the 0, which is TP2. We have the 0.25, which is TP3. And we have the 0.61, or the negative 0.61. And this is negative 0.25, which is often called a runner, okay? So TP4, if you're holding your trades after break even. So again, the 1, 0.76, 0.61, 0.5, 0.38, 0.23, 0, negative 0.25, and negative 0.61. Hopefully that answers your question. Yep. Oh, and this is, let me write this out. And I'll explain all of them in a second. And then And then this one is structure. Okay. So basically, if you're new to the concept of fibs, basically a lot of traders use this as a tool to help them understand structure. It helps them find key points in the market to find a retracement before price has a continuation. So usually in a trend, price is going up and down, up and down, up and down, right? It's forming lows and highs. So your fib is helping you find these areas of retracements, okay? So that people can find a pivotal point in the market to catch a nice buy for a bullish trend or a nice sell for a bearish trend. So, and we're gonna talk more about that with market structure at 7:30, but when it comes to these levels, you need to understand what they mean. So of course, if you're placing your fib and you're trying to figure out that key point in the market, you wanna have these levels marked up just like this. Your 1, which means it's an invalid trade. In this example, if price has a continuation to the downside to that 1 level that we had marked up, it means that this fib was not accurate. 7.6 is primarily where you want to have your stop loss placed, or AKA your safety net, just in case we have a wick and it decides to fake us out, okay? Golden zone meeting, that's where the key retracement is usually happening. So between, areas of even supply and demand, price will have a lot of fluctuation between your 0.5 and 0.61 area before it has that retracement, right? Because it's not always gonna be perfect. If you're in a bullish trend, sometimes that candle in this area is going to fluctuate. So sometimes it might look something like this before pushing up. So primarily all this happens in that golden zone before it has a retracement, okay? So that's why we call it the golden zone, because it's the key area that people want to buy in a bullish trend or sell in a bearish trend. Do you have a Telegram channel? I do. Mentorship and signals. It should be in my bio on Instagram, but I can go ahead and type it in here in a second. I'll send you the I'll send you the mentorship link, because I have 2. I have signals and I have mentorship. I'll send them both in a second. So this is signals, and then this is and this is mentorship. Active Monday through Thursday. It's primarily for people that don't have the time to join these lives and they want a more detailed analysis. So like, I'll send my setups for free on Discord, but they won't be as detailed, because I think it's not fair for the people that are paying for services. So on Telegram, they're gonna be more detailed and they're gonna be updated through intervals so that people have an update analysis on the trades that I'm in. And the mentorship, it should be Tuesday through Thursday. We do workshops, and then I send out homework so you guys can be accountable for yourself. But those are the 2 links there. But where was I going? So the 0.38 level is very useful when you have past structure, because sometimes price will actually respect a given area of support and resistance instead of hitting that golden zone. So sometimes you'll have past structure that's going to reflect off of instead of that golden zone, and then have a continuation. So that's why the 0.38 level is also important, because most traders make the mistake of just waiting for price hit that golden zone without realizing that there's previous price action saying that, hey, we have this nice strong level of support, so price is instead gonna respect our 0.38 level, okay? Which is why I have this yellow line marked up. And then of course your 0.23 level is TP1, your 0 and negative 2.5 is TP2 and TP3. Now the reason why they're both blue, because when you're using your Fibonacci retracement, 9 times out of 10, when it hits TP2, it's also gonna hit TP3, Okay, and then if you have a runner, that's that negative 0.61 level. You just want to hold your trades, then price is just going to go ahead and hit that level. But this is why they're color coded the way they are. Gray meaning it was invalid. Red, when I think of stop loss, I think of the color red. So 0.76, 0.5 and 0.61. The reason why they're yellow, because golden zone, it's like the golden area. So when I think of gold, I think about yellow. 0.38 path structure. I don't know why it's purple. It just makes the most sense to me. 0.23 level TP1 green, because TP take profit. I think about green. And TP2, TP3 blue, because I don't want them to be green just as TP1, because TP2 and TP3 are much more similar in the sense of being smacked in the same time intervals, because they're so close together. And then of course TP4 is also green. So if you have a runner, of course it's going to be a much wider, because you're kind of just letting that trade play out, which is why there's a larger gap. Okay, so hopefully that makes sense. If it doesn't, just let me know and I'll explain parts that did not make sense. Well, this is the Fibonacci retracement. So again, on Euro USD, we're probably just going to wait for price to melt back down to that level of support, since we have news saying that sellers are in control of the market. Excuse me, guys. But sellers are in control in the moment. So we're going to see what happens on Euro USD in the next 30 minutes. But I don't think we are going to find a move on Euro USD, particularly today. We could find something tomorrow as news starts to pick up, and we have news on Euro pairs pretty much all day. But this morning, I doubt we're going to find a move on Euro USD. So main focus this morning will be on EG. This is the only trade that I have. And I'll go ahead and update it on Discord and OBS in a second. So let's see. Trades taken live. We have a buy stop on Euro GBP. No problem, Kelvin. I'm glad I was able to answer your question. So we're gonna give it another 2 minutes. We're gonna check back on EG, but at the moment, I'm gonna make sure everyone's good and caught up on Discord real quick, and I'll be right back, guys. Alrighty. Give me 1 second, guys. I'm going to go ahead and put this in my trading journal. And that's one thing that I advise everyone to get in the habit of. When you trade, journal every entry, because it helps you, it helps you just stay accountable with what you're trading, and it helps you, get into the sense of taking this more serious as a career, because you want to be able to review your progress. Okay. This was, let's say 6, I'm gonna say 6:50 a.m. Give me 1 second, guys. I'm just making sure I have all this tracked in my journal. All right, cool. Cool. All right, so we have about 30 more minutes, and I'm going to go ahead and talk about, or talk more about market structure, and then we're going to go ahead and end the stream. This is the only trade that I called out this morning on Euro GBP. A simple scalp to the upside, buy stop placed above that zone, waiting for that breakout so that we can grab all these orders right here, take out these highs, and push towards this next zone of supply. If you guys have any questions, let me know. If you guys need any more information on this analysis, have any questions, I will be more than glad to break out or break down any concepts that I talked about earlier as well. If you guys want me to analyze a pair that you're trading, please don't be afraid to send me your chart analysis for review, and I'll be more than glad to talk about it. But yeah, like I said, guys, there's not going to be too much going on this morning. We don't have a lot of news. It is Tuesday, January 31st. So if we come to the right side, you guys can clearly see that we have all these yellow folders, meaning that the market isn't going to be as volatile. But yesterday's move was absolutely beautiful. I might break this down more on Instagram. As you guys can tell, this year especially, I'm very busy. So the time that I have is very strict this year on the things that I'm doing, particularly outside of school too. So if I have the time, I'll make a recap video. I'll post it on Discord as well, or I'll just clip it up. I'll clip up the recap from this live and post it in Discord. Alrighty, so it's now just a waiting game, guys. Hopefully we can get this move live. If we don't, I will send updates in the Discord, and I'll just make sure everyone is updated by tomorrow as well. We're gonna keep this whole analysis throughout the whole week on EG, and then we're gonna check back on gold to see if we can find a setup after it picks up on Wednesday. And of course, we will analyze any other pairs that I trade. But I currently have a buy stop placed on EG, and that's it. So we have about 20 more minutes. If you guys have any questions, please let me know. I'm going to go ahead and get some more water real quick. I'll be back in 2 minutes. If you guys have any questions, let me know. I appreciate everyone that's tuning in so far. And again, I hope you guys are having a good morning. If you guys have any questions, please don't be afraid to ask, because any question is a great question. All right? So I'll be right back. All right, so we're just waiting for the next 15 minutes, guys. Not too much is going on. We're simply just playing the patient game. Yo, Steve, what's good? What's good? I'm doing good, man. Slow morning. Kind of just wrapping up for the workshop in the next 15 minutes. I only took one trade this morning on Euro GBP. We have a buy stop placed above this range right here, simply waiting for a break of structure. But yeah, definitely gonna be a slow morning as it was the start of the stream, but not too much going on. It is Tuesday. We are having NFP week. So Tuesday, Monday, been pretty slow. Wednesday it is going to pick back up. And then Thursday it's going to get even more volatile. And then of course, Friday NFP, I will be live, but I'm doing good, man. I'm just chilling right now, playing the patient game, just on my phone at the moment, but doing good. Hope you're doing good too, as well. Hope you're having a good morning, good start of the week, good start of the year in general. But in the moment, we're just playing the patient game. So we have about 10 more minutes. If you guys have any questions, let me know. But I appreciate that, Steve. Appreciate it. So we have about 8 more minutes, and then we're gonna go ahead and start. I'm gonna make sure everything is recorded as well for those that are dipping in and dipping out. Everything will be recorded. So as we talk about market structure, again, I am aware that a lot of people already have a brief understanding of what market structure is and how to find structure. But this last 30 minutes is gonna be for the beginners that are just hopping into this industry. Okay. So we're going to cover all that from the trading Bible and just talk more about structure, trading tactics. It's going to be very quick, as I did kind of talk about it with the Fibonacci retracement. But this is what we're going to talk about at the end of this live. And then, of course, everything will be recorded. I'm just simply going to read off what we have right here and show examples on the chart. And then talk about higher highs, higher lows, lower lows, or highs in correlation with your systems that you use, whether if you're trading ranges, the fib, and then we'll wrap it up. So we have about 7 more minutes, guys. We have about 5 more minutes. You guys have any questions? Now is the best time to ask before we start. All right, so we're about to get started in a second. Okay. So let's talk about it. Trading tactics. Okay, so this is gonna be very short, sweet to the point, guys. And of course, if you're dipping in, dipping out, that's perfectly fine. I will clip up everything as everything is being recorded. But when we talk about market structure, guys, this is gonna be for beginners, especially. It's very important to have a brief understanding of market structure so that you're not looking at the charts confused when it comes to price action. Okay. When we identify the trend, uptrend or downtrend, and the level of support and resistance, okay, when it comes to trading tactics, and we find a pin bar near these levels in line with the direction of the trend, the second step is to know how to enter the market based on this candlestick pattern. So when it comes to the fib, right, I think there's an example on Euro USD. 9 times out of 10, you will see a wick coming off of that zone in your 0.5 through 0.618 level, which is called the golden zone. When you see that wick, 9 times out of 10, that wick is actually a pin bar formation candlestick pattern. Now, you could use it as a confirmation that the sellers are losing momentum in a bullish trend reversal, or the buyers are losing momentum in a bearish trend reversal, meaning that wick is pushing off of that significant level of your golden zone to have a continuation or a trend continuation. So when you see a wick, again, you guys can use that wick as a pin bar confirmation that your trend is going to hold with market structure. Okay. So according to my experience, there are different entry options when it comes to trading pin bars. It all depends on the candle anatomy. Okay. And I think this goes back to what I talked about the other week. The pin bar is probably the most powerful candlestick pattern, or the evening star, morning star. Doesn't matter how you want to combine that candlestick, because it shows you that whoever is in control in the market is losing control for a huge reversal in the market, okay, or a retracement. So the aggressive entry option, this method consists of entering market immediately after the pin bar closes without waiting for confirmation. This strategy will help you catch the move from beginning, because sometimes the price goes higher after the close of the pin bar. So we're not going to talk too much about this because this is going in depth of a aggressive strategy. But basically, just like I talked about, he's entering off of the pin bar off of structure. So whether if it's a break of structure, having that break of support or that break of resistance, you're simply waiting for price or that candle to have a pin bar formation, which means there's a wick coming off of that line or zone to enter on the market. All right. So let's go ahead and move down here, because they just go ahead and give examples. As you guys can see, it's showing you an example of structure where they has a break of structure and then support becomes resistance or resistance becomes support, and they're entering off of that pin bar candlestick where that wick is bouncing off of that newly formed support. Okay. One of the drawbacks of this entry option is that the market sometimes doesn't retrace to the 50% of the range bar, which will make you feel frustrated because the market will move to the profit target without you. There's no wrong or right entry option. They both work great, but with screen time and experience, you'll be able to decide whether or not to trade aggressively or conservatively. Confluence happens when many technical indicators generate the same signal. This trading concept is used by price action traders to filter their entry options and spot high probability signals in the market. Okay, cool. So factors of confluence, the trend. It is one of the most important factors of confluence. This is the first thing that most successful traders look for on their charts. You can't trade any setup without identifying if it is in line with the direction of the market or not. So the trend is one of the most important confluences. And when it comes to the trend, you guys need to be able to identify structure. Just like I talked about earlier on the stream, when it comes to an uptrend, you need to have some structure of higher highs, or I'm sorry, some higher lows and lower highs. Did I get that confused? I did. I'm sorry. Higher highs and higher lows. Sometimes I get confused. But in an uptrend market, when it comes to finding structure for a fib retracement, let's say if you're trying to catch a fib off of this trend, then you want to have past structure indicating that price is going to have a continuation to catch that buy, right? Or that retracement. So this area right here, or this point right here, is much higher than this one, which is why it's called a higher high. And then this low right here is a lot higher than this low, which is why it's called a higher low. So for an uptrend, you want to identify structure with higher highs and higher lows. And then of course, with a downtrend market, it's vice versa. So I'm gonna keep that up on the screen just for a second so you guys can have a grasp of what I was talking about visually before I delete all this stuff. Or I'll just move it to the side right here. Okay, so I'm gonna keep that up here, and then vice versa for a downtrend market. Let's say you want to catch a continuation, you want to look for structure for that downtrend push. So of course you place your fib from bottom to bottom. Of course you're waiting for price to enter in that golden zone. But for a downtrend market, we're looking for lower highs and lower lows. So this low being a lot lower than this one. And this low being a lot lower than that one. So this is actually called a lower high, right? And then we say this is also lower high right here. And then we have a lower low and a lower low. So in trading terms, this is how a lot of traders will explain this concept when it comes to highs and lows, okay? Very, very simple. So the second thing that you want to be able to identify when it comes to factors of confluence is support and resistance, key levels, and supply and demand areas. And we'll talk more about supply and demand as it is more advanced when it comes to smart money concepts. Moving on when we talk about the naked FOREX PDF. But the most basic retail concept is support and resistance. These major levels have a significant importance in the market because all big participants watch these specific areas, which is very, very true. Moving averages we're not going to focus on. Fibonacci retracement tool, which is what I was just going over. The 61 and 50% level, which is the golden zone. Okay, trend lines, drawing these lines on your charts give us an idea about the market direction and help us find the most important reversal points in the market. Now, trend lines are important, okay? I'm not gonna say they are not important because you can use trend lines as a form of support and resistance, okay? So these are talking about moving averages. We're not gonna get into. Let's see. The reason why I'm staying away from moving averages is because you don't necessarily want to use indicators as they do lag. I'm not a huge fan of indicators the only indicator I do use is the RSI because it is accurate, okay? Everything else isn't as accurate in my opinion. Okay, so trading pin bars in range-bound markets. This is just what we talked about with the same concept of the box-in method. So when you guys are using pin bars and you're trading ranges, let's say you're going from support to resistance, that wick can be used as a confirmation that that range is going to hold until you have a breakout or a break of structure. So trading pin bars in range-bound markets, we can say that a market is ranging when prices don't make any higher high and higher low and starts to trade horizontally between a definable level of support and definable level of resistance. So it's basically just telling us that when you're in a range and price isn't trading above that high at that given resistance or below that low at that given support, then 9 times out of 10, that range is going to hold. So kind of just shows an example, but we can also correlate all that information to the setup we had on gold yesterday, right? We were simply just waiting for price to have a break of structure. But as you can see at these points right here, we have a pin bar formation, or we have a wick bouncing off of that zone. It's not 100% accurate. Oh, I'm sorry. It's not 100% perfect. It is pretty choppy, but you guys can clearly see that we are wicking off of that level of support or that defined zone. So when you guys have that confirmation, it's going to tell us that that zone is going to hold for a longer period of time before we have that break of structure or that breakout in that zone. And the reason why this is a good thing, the reason why you guys want to see something like this, especially if you're trading this concept, is because when we have that wick coming off or bouncing off of that level of support and resistance, it's also generating a lot of liquidity below or above that given zone, so that when we have that breakout, it's going to have a clean move to the downside. In this example, we had a lot of built up liquidity below the zone, so that eventually when we had this breakout, we had zero drawdown. So this is something you want to use in the concept of ranges and the concept of BOS when you're trading market gaps, or you're just simply waiting for that candlestick confirmation, okay? So let's see. We can continue right here. To confirm a ranging market, you have to look for at least 2 touches of support or 2 touches of resistance. And once you have a identified range, then it becomes very simple to trade it by going long with the prices that reach support or the prices that reach resistance, okay? So it's just showing you a more defined visual example right here, which you will see oftentimes. As you can see, price approaches the key support or resistance level, and we have opportunities to buy or sell in the market. We just need to wait for a clear price action setup, such as a pin bar candlestick pattern, okay? So again, you guys can trade candlestick patterns alone, but you don't just want to use it as a strong indicator that your bias is going to play out relying just on that candlestick. You want to combine it with your technical analysis, or you want to combine it with a certain concept such as ranges. And the most important candlestick is the pin bar, aka wick. So it's just showing you a more defined example. Again, you notice that these wicks are coming off of these defined levels of support. We have a touch right here, a touch right here, and a touch right here, and price respects this range. So again, it's going to start talking about indicators, which I do not use. So I'm going to skip this part for now. And then it just goes to the next candlestick, which is the engulfing, but we don't have to cover that. And then I just cover this, guys. When it comes to a bullish trend, you're going to find highs and lows to identify some sort of structure. And then it's talking more about the engulfing candlestick. But I think that's all we're going to cover. I think that was pretty short and sweet to the point. If you guys have any questions, let me know. But again, everything is recorded. So if you guys are dipping in and dipping out, that's perfectly fine. I will clip all this up to post on IG. Let me know if you guys have any questions. Again, hope you guys are having a good morning and a good start of your week. Today was pretty slow, which is perfectly fine. We only took one trade on EG, and we can go ahead and check to see if that trade is still consolidating. Okay, so it's still moving pretty slow. I'm gonna keep this up throughout the whole day and send updates in Discord. And of course, we're gonna keep this up until Wednesday. We're probably gonna go ahead and change our analysis as Wednesday starts to pick up. We have news on Euro and CAD and USD, and then Thursday it's going to pick up even more on GBP, and then Friday we're going to go ahead and live stream NFP. But yeah, that's all I have. We're just going to be patient for the last 15 minutes. If you guys have any questions, let me know. But that was the quick class on market structure. For those of you that are new to trading this year especially, I hope this was helpful. If you have any questions, please feel free to reach out to me on Instagram or Discord, and I will answer any questions.